Hi, this is Wayne Belial. Welcome to another Smart Profit Maximizing Moment. Again, my name is Wayne Belial. I'm a CPA and a profit coach. We really do three things. Part of the profit formula, which I haven't really got into except for the first video. I explained it in a little bit of summary form. The T is taxes. So we also do tax planning. And this last year we saved over $1 million. The last 3 years, a little over 4.3 million, excuse me. One reason we're a little lower is the tax cuts that went into effect that really definitely helped business owners. I'm so sorry. Today we're going to talk about when should business owners expect money problems, all right? Yeah, you really should. But before I get to that, a couple of housekeeping things. One, if I cough, I do apologize. I'm fighting a cold. I went to the doctor yesterday, gave me a shot, some magic stuff, a little bit of nebulator for the chest area, and we're going to power through this. We'll get through it. Don't worry about it. Doctor said I should take a day off. I said I'd take one in April. He didn't find that real funny, so I probably will take at least the afternoon off today. Doctors, you know, they don't understand we're trying to make money here. Another thing, I do apologize for not being here yesterday. I got a call. Our dog, Karma, is a 15-year-old beagle, passed away yesterday. Not trying to make anybody sad, just it happened, and I got the call right before this was supposed to go live, and I wanted to be there with her. So she had a good life. She was a great dog, kind of misleading beagle because she was well behaved. My daughter has two, and my other daughter has one, and they're not at all like her. So she's going to be missed. We have plenty of dogs, though, so but everyone is a part of the family and will be missed. Sorry, didn't mean to bring everybody down. Anyways, cash shortages, all right? A lot of business owners think that cash shortages just kind of happen. They happen to them, excuse me, I told you I was going to have a problem. They happen to them sort of like natural disasters, you know, hurricane, tornado, whatever, you know, so they expect, they don't expect them, they don't plan for them, they don't realize what's happening. Well, there's really two good reasons for cash flow, all right? Cash flow problems happen two times. One, a decrease in sales. All right, these are the two main ones. There's really three, but we'll go through them. One is a decrease in sales. Two, believe it or not, is an increase in sales. And third is obvious, an increase in expenses without plan to how to increase the sales to support those expenses or financing in place. I'm not going to go into that one very much today. We'll talk about that later. Let's talk about decrease in sales. Business owners, by nature, are optimistic, all right? And they assume any decrease in sales is temporary, and because of that, they tend to react slowly, all right? Many don't even have an accurate bookkeeping system where they're able to get timely information that the sales were actually going down. You know, a business owner really seriously needs to know that, you know, they need to review their sales data. They need to pay attention to their receivables, which is also a problem. Selling it is one thing, but remember, it's not a sale until the money's in the bank. If the money's not in the bank yet, it's not a sale, okay? So first thing you do is start collecting receivables, but second thing is make sure you have the right bookkeeping. I'm gonna give you an example. I worked with one client where they hired me to do their quarterly review of their financial statements. So prepare, you know, they do it, I review it, fix it, prepare it, have a meeting with them every quarter. One of the things I noticed is one of their departments, since I've been helping them for a few years, we had their sales, their financial statements, pretty darn accurate, to be able to show sales by department, all right, cost of goods sold, gross profit, things like that. And I was able to see that one of their departments was down about 30%. Now, I don't work there. You know, I'm a third party looking at it from the outside. I work with them enough where, you know, I'm actually kind of like a run a CFO with them. Work with them enough, I saw something was happening, and I could see some of the statistics starting to reflect that, you know. Some of the ratios were going out of balance and things like that. We sat down and talked to them, and they looked at it, and they called in the sales manager, and the wife was there. She also works as a sales manager. They talked a little bit and realized, hey, we're not getting any sales from this one large customer. We used to get sales. Now, you would think they would know that. But as a company grows, the owners get a little further away from the front line. Dangerous situation. And when you do that, you need to have better information. It's simple as that. So they were able to get the report, see what the company was. The owner, who had originally sold them, called up, and what we found out is the purchasing agent of the customer had left. and he or she, I don't remember, was working with VK forever and was comfortable with them, but the new purchasing agent sent it to a friend of theirs. They went and made a meeting with the boss, the president that they knew, and resold themselves. It's like, did we have a problem and we'll fix it? And I said, well, I didn't even know we weren't buying from you, because here's another guy who's running a larger company, is farther away from his purchasing, So they get into it, strike a deal back with them, and they fix the situation, all right? If they had not caught that situation early enough, the projection was that was going to be close to $300,000 to $400,000 in sales that they would have lost. They caught it at about 60,000. Good numbers really make a difference in decreased sales. So, all right, as soon as you notice a drop, like I said, investigate. There are two possibilities. A sales drop can easily be remedied by increasing efforts to boost sales from current customers or prospects. Talked about that a little bit in an earlier video. In that case, the business owner needs to concentrate their efforts on marketing and sales area of their business until the sales are back to normal. The business owner has to get back in the front line if they're not already. If you are in the front line, then concentrate on your best customers and getting them to buy more. Go back and watch one of our earlier videos, okay? Call me. I'll be glad to help you with that. That's an area I do pretty well. The second possibility is there's a permanent loss in sales. This can be, like I said, losing a major customer, a new competitor pushing prices down the street, or change in the market that permanently reduces your share of it. Think Netflix invading Blockbuster, or Amazon knocking Sears and Toys R Us out, okay? In this case, the business owner has to be a whole lot more creative and a lot more getting into the facts, and you really should get somebody to help you. I'll be happy to help. That's an area that I do pretty well with too, but you need to find somebody. If it ain't me, find somebody. How do you attack that? Well, you increase sales by finding new niches for your current products. Let's say you're being attacked by the big guys. I'm so sorry, but I warned you. If you're getting attacked by the big guys, make sure that you find a niche that they can't get to. See if you can figure that out. Sorry, I had something pop up there. Increase sales by finding new products to sell to your current market or to other market. It doesn't matter. Cut costs to get your business overhead back to support the new area that you're at. All right. This often, means letting people go. And we're hesitant. That's one of the biggest problems I see with business owners. They don't react fast enough to things that change. Now, small business is a lot quicker at reacting because you got less of a leeway. You're going to find out you have a problem a lot faster. I worked for Magnolia Coca-Cola, a local bottling company, when they were regional. We were $300 million in the El Paso, over that, close to $400 million, and about $700 million regional. We were the biggest one by far. And it took a lot longer there, and that's still considered a small business by a lot of people. Well, it's not really. It's more of a medium business. But, imagine the Fortune 500s. That's why the Blockbusters got beat by Netflix and Sears and Best Buy. Best Buy is trying to react, so I shouldn't put them in there. Toys R Us are struggling because they just can't change. You're a small business. You can change. You just need to sit down and plan. That's why we're going to be talking about setting up a annual profit plan. This should be something you do every year. Make sure you pay attention, because I'm going to be going over this, and I'm probably going to be doing an in-depth Facebook Live. Not probably. I will be doing an in-depth Facebook Live 1-week event on how to set up a profit plan so that you're being proactive rather than reactive. Don't be reactive. If you are, you're always a step behind. Second thing that causes cash flow problems that people don't always expect is an increase in sales. Yeah, sounds weird, doesn't it? Happened all the time, especially in the construction area, in the general contracting area, the trades area, okay? Started off small, get a job, $25,000. Hell, you probably started with $2,000. You do that job, but you build up to a $25,000 job, you do a good job. You start to get, contacts with general contractors, and they start sending you work. All right, you do a good job, they send you a slightly bigger job, then they send you a slightly bigger job, then they send you a slightly bigger job. Then all of a sudden you jump from your jobs are in the 50 to 100,000, you can handle those. And then all of a sudden they send you a $500,000 job, and you're like, yeah, did it. What you don't understand, and that's what happens, is that's where the cash flow problems start. Okay? Because what happens very simply is that no matter how you structure this, you're going to put out people costs and material costs and your overhead, and some of these take time to get paid, all right? So there's a delay and a lag, So that's where the serious problem. Plus, you're usually going to have an, even if you're not doing that, if you go out and make a massive sales, and I got plenty of, another example that I run into besides that, I remember a glass wholesaler who put something on sale, and this usually I tell this story when I'm talking about gross profits, but it plays here too. He put something on sale, sales went up dramatically. He actually lost money that month because he didn't plan his people cost in order to handle it. So he had a ton of overtime and had to bring in a bunch of outside salesmen that blew away his cost. All right. He didn't have good cost numbers. That's another problem entirely. So look, to avoid resulting cash crunch, the owner has to plan to cover the shortage. My contractors, what we started doing is going to the banks, and they have things called contract funding. It's really kind of an umbrella line of credit. Okay. So I remember one guy, we went and got $1 million line of credit. Now, the reason he didn't have the ability to get $1 million line of credit, he hadn't been in business that long, didn't have a big enough track record in profits to support that kind of line of credit, and didn't have any other assets except for the contract. The contract was from TxDOT, which is the Texas Department of Transportation. So in truth, the bank's not lending him the money; they're lending TxDOT the money. Is the way they look at it, and you're the conduit. So they usually run a deal where they'll advance you up to 70% of the contract as you perform. So you can pay for your material and labor as you do it, all right? And some of your profit. Most of my guys don't do any more than take out their labor, but if they have to, like they're starting another job, and it takes some time, effort, to bid and get the job, then they may take some of their profit out. When the TxDOT pays them back, the check, there's different ways this happens, but a pretty common one is the bank, it's made out to the bank and to my client, and the bank takes their loan out and deposits the rest into their account. But what it does is it eliminates that cash flow problem. All right. So what it requires you to do is to make sure, to avoid resulting cash crunch, that you plan to cover the shortages by either having sufficient reserves, getting a line of credit like I talked about, or ensuring that cash collections will come more closely to matching cash outlays. One last story before I finish. I had a manufacturer who took special order jobs. One change he made was to take 50% deposit up front, which covered his cost. They didn't start a job until they got that 50% up front. Now what that did is eliminate all their cash flow problems, because it's talking about the last one, having their cash outlays come closer to cash inside. At the end of the day, remember, cash is the lifeblood of your business. You run out, you quickly can find yourself bankrupt, even though your financial statements will show you're making a profit. All right. Moral of the story is you got to keep your eyes on the ball when sales are going up or going down. So you better watch those sales numbers. You better make sure you have good books. If you don't, get with your accountant now and fix that problem right now. All right. Hey, keep your eyes open. Keep here. I apologize for a little bit of craziness in the last day or two. I got through it with only 1 or 2 coughs. I shouldn't say that out loud. It kind of triggers one of the cough. So I'm going to stop now. So until next time, let's make this our most profitable year ever. Thank you very much.